Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. When we talk about the markets, the Nifty yesterday traded in a 200-point range, and despite the three of its biggest constituents contributing, HDFC Bank, Reliance Industries and TCS, the index only ended flat, as those gains were actually offset by stocks like SBI, ITC and Axis Bank. All of yesterday's trading session was all about the pain in the broader markets, especially the small cap index that's now dropped 10% from its peak and consecutively down for the fourth straight session as well. But can the markets expect a rebound on positive macro data and global support? We will tell you, but first up, the top headlines we're tracking for you this hour. Indian stocks are likely to remain in a narrow trading band on Wednesday despite easing inflation figures both in India and the United States. While selling pressure may ease, bulls are unlikely to dominate sentiment. Block deals are the main draw for traders. It's ITC's turn today. British parent BAT to sell up to 3.5% stake in India's cigarette giant for 16,700 crore rupees with a 180-day lock-in period. Buyers will be eyed. Very good morning to all our viewers and good morning to you, Shail, as well. Well, today's trading session will also see the Nifty react to both the macro data, CPI, IIP, and of course the numbers from both India and the US. But it's the mega ITC block deal that will be more important to be tracked, worth about nearly 17,000 odd crore rupees, which will take place today. Now, will this determine Nifty's trajectory going forward from here? Will it provide some kind of a respite from the pain that has been seen in the broader markets, Shail?
Very good morning to you, Sakshi, and a warm welcome to all the viewers who are joining this on a fairly warm Wednesday morning in Delhi. Let's just look at the numbers, Sakshi. So we have two macro events that are going to impact the Nifty, which is inflation from the US, which was below very strong expectations. That's a good news, and that's the reason why the Dow, the Nasdaq, and more importantly the S&P 500 showed a very smart uptick on Wall Street yesterday. And of course the local inflation was also under control. The numbers don't matter, it's the sentiment that is more critical. So both these numbers are under control, and that opens up some expectations of a cut in interest rates, at least on Wall Street, followed by a similar cut on India. Whether that happens or not, only time will tell, but for today that's how the pictures are cued. The more important thing, Sakshi, is that we are in March. Traditionally, March has been extremely volatile for a couple of reasons. One, you have the advanced tax numbers that have to be filled in. People have to adjust their long-term losses against short-term profit. So a lot of volatility is what is accompanied, and the fact that we have a very, very strong resistance coming in at 22,400, 450, 22,500. So it's a range-bound trade that is most likely seen on Nifty, which is going to be extremely volatile. If you see yesterday's high, it was something like 22,452, and the low was 22,256. Therefore, a 190, 195, 200 point range as far as the Nifty is concerned. and that is an extremely volatile range to trade. So one thing that can be done is that once the index goes above 22,500 for whatever reasons, only then get into the long side and wait for 22,250, 22,200 to be strengthened by the bulls. If you see the daily chart of the Nifty, the 10 EMA is in the thick of action. This is where bulls and bears are battling it out. And if you see how the candle was formed yesterday, it was almost between the high and the low. So there is a great tussle that's happening to gain supremacy on the Lal Street by the bulls and the bears. I would imagine that you take a trade towards 22,250, 22,200 if the index dips towards that level, and you exit around 22,400, 22,450. This is a trading range which will take time to move out. Sakshi, that's what the Nifty is all about today. Whether you see the weekly Nifty chart or whether you see the monthly Nifty chart on options chain, these are the 2 or 3 levels which are being buttressed either by moving averages or by call and put concentration.
Okay, let's now talk about the Nifty Bank. Now, despite extreme volatility that we saw yesterday on the Nifty Bank, it did manage to hold on to its 20 days moving average and a support at 46,800 on the downside. And of course, this tug of war was actually between the bulls and bears on both sides of the bank. So HDFC Bank on the one side, which was trying to pull up the index, SBI, ICI, Axis Bank offsetting the gains as well. And eventually the index really largely ended unchanged yesterday. Again, today will be the weekly options expiry for the Nifty Bank. How do you see the banking index really move today, Shail?
Sakshi, I think you've mentioned all 4 or 5 major points that I wanted to say, so there's no point sort of repeating them. It's the weekly expiry. I expect it to be range bound. Yesterday's move was extremely volatile. I think it should be just left to its moves, and then there are better things to do in the market today rather than look at Bank Nifty's weekly expiry.
Okay, and F&O space, Shail, any particular stocks there that you will be looking at today?
Yes, actually, I think the focus of the entire market, all media, every single brokerage house, and all institutional, retail, and ultra HNIs will be on ITC today. It's the top star as far as markets are concerned. We are going to see a huge block deal, which is in the vicinity of 16,700 to 17,000 crore rupees, likely to happen on the National Stock Exchange today. Parent British American Tobacco, which controls about 29.3% stake in ITC, is likely to offload 3.5% stake in the company for the value that I have mentioned. And a set of marquee investors are most likely to come in. Remember, ITC is an index stock. You see the daily and the monthly charts coming there right in front of you. This is the monthly chart. ITC at a 1-year low. Similar prices were seen in April 2023, and it's corrected fairly sharply from its all-time high of 488. So a great day for Indian equity funds, for Indian insurance players, for ultra HNIs and Indian mutual funds to get a nice, a huge chunk of ITC in their portfolio. This is of course an index stock. Ever since I can remember, ITC has been a part of the Nifty and the Sensex for the last 3 decades. This is a face value 1 company, India's top cigarette maker and hotel chains. It has a host of other businesses, and this is something that people will want to take a decent stake into. Even life insurance companies are likely to step in, those who are in the mutual fund space. Remember, the LIC of India, the market's largest player, holds about 15% stake, 15.2% stake in ITC, and the special undertaking of the Unit Trust of India, better known as SUTI, controls 7.8. So the government of India is a very, very big player in ITC, and why not? ITC is a top corporate taxpayer, and has cigarettes as its main business, which are heavily taxed. Actually, it's going to be a great day.
Absolutely, and ITC will be something that will be under spotlight today, and we will discuss with a whole host of guests as to how should you be viewing this stock amid the big block deal that is going to take place today. Let's talk about the global cues as well. US stocks ended sharply higher on Tuesday, with the S&P 500 registering a record high again, closing as the Oracle shares they surged, and the consumer price data also failed to dampen the investors' hopes of interest rate cuts in the coming months as well. So S&P 500 was a percent and more higher, ended at 5,175. The Nasdaq was the one that was celebrating to 1.5% higher. 0.6% gains came in on the Dow Jones as well. So all three of them were inching up higher in the overnight trading session. As far as the Asian markets are concerned, stocks in the Asian markets opened higher as traders held on to Federal Reserve rate cut hopes for this year despite hotter than expected inflation data. But equity benchmarks climbed in Japan, South Korea and also Australia. We did see the Kospi about 0.3% higher, and then most of the stocks really and the indices really traded on a volatile zone. So the Nikkei slept about 0.8% in trade. Hang Seng and Shanghai also slipped about 0.03% to half odd percent in trade as well. The benchmark index, Sensex and the Nifty today are likely to open on a positive note, as the trends in the GIFT Nifty indicate a positive start with a gain of about 27 odd points. So that will be something that we'll watch out for. The flows, as far as those are concerned, FIS continued with their buying spree, although the quantum was reduced to just 73 odd crores, with the domestic institutional investors purchasing about 2,358 crore rupees worth of stocks in the yesterday's trading session. Let's look at the stocks then. Of course, ITC we've time and again mentioned in the headline, and Shail has also pointed out how British American Tobacco has now launched a block deal to sell a 3.5% equity stake in ITC for as much as 16,775 odd crores. It plans to sell 43.6 crore shares via this book build process in a price range of 384 to 400, with the lower band 5% discount to previous close, that is 404 rupees per share on ITC. We'll see how the stock reacts today on that one. Vedanta is going to be in focus. SEBI has asked Vedanta India, earlier known as Kane India, to pay Kane UK Holding 77.6 crores plus a simple interest rate of 18% for a delayed payment of dividends. That stock could be just reacting to that news just a bit. KFintech Technology is another one where the block deal is taking place. So Kotak Mahindra Bank is selling 34.7 lakh equity shares, which is equivalent to 2.03% of the total paid up equity in the technology driven financial services platform at an average price of 600 rupees per share. Now Kotak Bank held a 9.8% stake as of December, which will now come down after this stake sale. Oro Pharma will be in focus. UGA Pharma has restarted distribution of aseptic products and will start commercial production from aseptic lines in a phased manner beginning next week. Glenmark Pharma could be in focus. The company has completed the transfer of remaining 20% stake in Glenmark Life Sciences to Nirma. That's going to be in focus. Oriental Rail Infra has received an order worth 1250 odd crores from the Ministry of Railways for manufacturing and supply of 3,055 wagons. So that stock could be in focus. Lemon Tree Hotels could be in focus. The hotel chain has opened its 8th hotel property in Udaipur. Lemon Tree Hotels and Keys Select is the brand under which the hotel has been opened at. So we'll keep an eye out on this one. Shalby Hospitals is going to be in focus. The healthcare services provider will acquire 100% stake in Healers Hospitals from its existing shareholders for 104 crores. That's also be in focus. And of course, apart from this, HG Infra, the company has received a letter of award from East Central Railways worth 709 crores will be in focus. Signature Global has launched a new project under affordable housing policy in Gurugram, consisting of total 235 units with an area spread over 1.66 acres. That's going to be in focus again. So these are some of the stocks, and of course the new listing, JG Chemicals, the leading zinc oxide manufacturer, is set to list today on BSE and on NSE with the issue price at 221 rupees. We'll keep an eye out on this one as well. Let's now wait for our guest to join in. We will be joined by Gaurang Shah very shortly on this very special edition. Senior Vice President, Geojit Financial Services. We'll wait for him. In the meantime, Shail, anything else that you will be keeping an eye out on?
Yes, actually, I think we are just waiting for this trading range to get exhausted itself, either on the long side or on the lower side. But my understanding is that there is such a strong institutional flow. There is so much of retail money that's coming in that we'll break out on the upper side. A week of nothing on the bank or the bank nifty or the nifty is nothing lost. We've had 4 weeks of strong rallies. My only concern is how the small cap and the mid cap indices pan out over the next 15 days or so. But I must remind all our viewers that March has traditionally been very, very volatile, and we've seen a fantastic rally from April of 2023 into the small caps and the mid caps. A lot of profit adjustment is happening ahead of advanced tax numbers, which are on March 15th. That's the deadline. One does not need to panic at this point of time. Of course, be light, be extremely cautious on the long side, keep stop losses in mind, and there is absolutely, Sakshi, no harm in doing nothing. Enjoy the weather if you are in Delhi. Look at the lovely traffic islands that we have within the central part of the city. Have a picnic, go to a movie. It's not necessary that you invest every day, you trade every day, and you look at the markets and then minute by minute basis like Sakshi and I do. Take a chill pill, enjoy the weather, and be rest assured this will get over in a couple of days, couple of weeks, if not more, if not less. So just enjoy and let the bigger guys do the decision making. Once the trend is set, follow that trend and have fun.
Okay, let me also look at some of the brokerage houses report as well. So a few reports coming in on ITC itself. So HSBC has upgraded the stock to buy with a target price of 480. They do say that, of course, the stock has corrected from its peak. It's 11% down YTD, and this implies attractive valuation for its cigarette business and creates a buying opportunity. CLSA has also upgraded the stock to buy with a target price of 468. Here, the correction offers as an attractive multiple in a volatile market. They do believe cigarette volumes will be muted, but premiumization could be underway. Again, FMCG gradually becoming a key driver, and agreed to stabilize with value-added products to be the key growth drivers for the company going forward is what CLSA believes. The bullish target is also coming in from Morgan Stanley on ITC, which now believes the stock can again rise to 491. Expect ITC's stock outperformance to resume after the stake sale. They also say they remain bullish on ITC based on expectation of a moderate cigarette tax environment, continued scale up of non-cigarette business and reasonable valuations as well. Apart from this, there are 2 or 3 more brokerage houses reports apart from ITC. So on BSE, Jefferies has given a buy rating with a target price of 3,000. It does believe that the NSE has announced a 1% cut to transaction charges on cash and derivatives products, and they see this cut as a part of periodic exercise and smaller this time, which signifies limited appetite to engage in price wars at this point in time. Nomura on NBFCs has come out with a report. They are reiterating a cautious view here, especially Shriram Finance and 5-Star Business are their top picks from the NBFC basket. For Nomura, they say that the growth could be at risk and FY25 could be a reset year. The cost of funds to remain elevated in FY25. However, having said that, rate cut happens in the first half of FY25, it could be positive for the company's NIMs of NBFCs in the second half as well. So that's as far as the NBFCs are concerned. The one last report that I have is on Avenue Supermart, which Morgan Stanley has come out with an overweight rating and a target price of 4,471. They do believe that DMart is ready not for a quick delivery platform, but on a pricing strategy and SKU availability, they outpace the peers, and therefore it maintains its value-focused positioning, and DMart ready landing versus peers and improving sequentially too. So they are definitely positive on Avenue Supermart. So that's as far as the brokerage houses reports for today are concerned, Shail.
Okay, we are waiting for Mr. Gaurang Shah to join in. He's the Senior Vice President at Geojit Financial Services, very long-standing, committed gentleman towards equities, who holds very precise, excellent views on how to make money in the medium to long term by buying quality assets. So this is something we are looking forward to discuss with Gaurang, the move on ITC. Remember, this is a major event within corporate India. You can look at it from 2 points of view. One, Gaurang is there. As usual, very spiffily dressed. I have always tried to find out who his tailor is. He has not shared the name over the last decade or so, be that as it may. And he doesn't imbibe spirits, so you can't, sort of force it out of him as well. Nevertheless, good morning to you, Gaurang. A very warm welcome on Market Today. Always a pleasure to have you. And the theme of the day is ITC. So who's buying? Are you?
That kind of watches to go and buy out ITC when BAT is selling. First of all, thank you very much for all those kind words, Shail, and I'm sure next time you're in Mumbai, I'm going to come to the airport, pick you up and take you to my tailor and my fashion designer so that you don't have to complain anymore. But be ready to shell out a decent sum of bill when it comes to you in form of these suits and the coats and the jackets that you will get. And it's always wonderful to to see you and Sakshi in the morning on your opening show. So ITC, I only hope that they get a decent buyer with the kind of total volume of the shares they want to offload Shail. And my sense is that, it's just a wild guess, Shail, that it could be anywhere between 390 to 400. I'm not too sure about what price they are going to offload. But once this overhang is done and dusted, Shail, my sense is that sanity should return to ITC. We've had underperformance not only from ITC but the entire FMCG pack because of the erratic monsoon and of course the Q3 numbers that followed after the monsoon, which was a little bit of downer. We remain optimistic on ITC from a long-term point of view. And if you do get opportunities sub 400 to buy it from a long-term point of view, I think you should do that. Even if you want to add on to it, if you've gotten at higher level, I think you should do that. We are maintaining a target of 465 to 475 based on the earnings that we've seen and the statements that are made.
Okay. Gaurang, who do you think would be the potential buyers? Both you and I and people who've had spent a slightly longer time in the market know that this is a company of strategic importance to the government of India. You can look at it from the shareholding point of view as well. Who do you think would be potential buyers? What kind of people would want to step in?
So I think all big ticket, possibly FPI players, there are a lot of names that are flying around. I only heard this. There are no confirmation, GQG partners, etc. These are the names that I'm hearing on the street, but there is still no clarity, to be very honest. There could be some domestic investor or maybe some, domestic fund or maybe an FI who would want to be a part. Now, what I'm not sure, Shail, is whether this sale of BAT in ITC as a holding form is going to go out at one stroke or whether it is going to be parts. I only hope there is clarity on that once we have the deals getting through on the block.
Okay. Very good morning.
So there are two things that I know of at least. That ITC will not be, the parent of ITC will not be selling another transaction for the next 180 days. So there is unlikely to be supply overhang from now on for at least the next 6 months. And coming to GQG Partners, this of course is a very well-known firm in India these days. They already hold about 1.74% stake at the end of December 2023, which is the latest update quarterly statement. And GQG Partners has raised its stake from September 20. In fact, since March 2023, the company has been raising its stake within ITC from a low of 1.44% in March 2023 to 1.74% as of December 23. So definitely there is interest on the long side by GQG Partners Emerging Markets Equity Fund, a very well known player in Indian equities these days. Sakshi, you were saying something.
Yeah, actually, good morning to you, Gaurang. I wanted to just ask you, with such a big block deal that we are expecting today of nearly 17,000 odd crore rupees, what does it suggest about the depth of the Indian markets? ITC is again the third MNC this year to pair stake in the Indian arm, and such large deals getting sold, do they show appetite for good quality paper in the Indian markets, and what does it really mean for retail investors at large?
Morning to you and Suprabhat to you also, Sakshi. So, if you just purely go by the primary market IPOs that have been hitting the street, forget about the matured papers, secondary market. You just look at the primary market. I mean, with the kind of issues that are hitting the street, not only this year, even last year, if you go to see, I think there is enough strong appetite in the market in terms of depth, in terms of liquidity, in terms of hunger for quality paper at good valuation. I think anybody and everybody would want to be a part of that investment growth story going forward from here on. So I don't see any liquidity related issues with this stake of BAT getting offloaded. I guess it will be just one-off deal, but till the time the block deals are done and dusted, we will have a little bit of choppiness and volatility. And once the deal is done, I think we'll get back to business. We would again want to know the growth story of Indian stock market, FMCG, ITC, HUL, whatever be it. So I don't think there is any kind of liquidity or depth related issues.
Okay. It's the pre-opening rates have come in actually.
Let's look at let's look at them, Sakshi. It's a nice bounce. I hope it sticks around. 99 points higher, 22,436. Let's look at the star of the day. ITC is trying to open 8.5% higher at 439. Let's hope this is true. And let's also look at the three index heavyweights. HDFC Bank 1% higher, 1475. Let's look at what Reliance is doing. It's trying to edge 16 rupees lower, 2935. And Infosys 1.42% lower, 1590 is what I see. Infosys now weakening a bit. Let's see what TCS is doing. Remember, it hit a record high yesterday, 4217, 24.75 rupees higher. ITC rock solid, 34 rupees higher at 439. What we'll do, ladies and gentlemen, let's get Mitesh Panchal in. He's a registered technical analyst with SEBI, and he runs his own consultancy. Good morning to you, Mitesh. Your two top picks for today.
Good morning. So my two topics remains from the power sector, that is REC. So if you look at REC, since last few days it is on the daily chart is forming a heart of R1 formation, and even yesterday it showed a good bit of a bounce. So we are expecting REC to trade somewhere around 490 to 500 rupees. So one can go long in REC with a stop loss of 475 at the rate of 483, that is a CMP, for the potential target of 495 and 500. And second thing, if you look at the chart of Aviation supermarket, that is D-Mart. So in D-Mart, as far as the weekly chart is concerned, it is forming heart of high bottom formation. And on the daily chart, since last 4 trading sessions, you see a good price volume breakout. So now the stock is trading above its immediate resistance levels of 3950. The close is 4031. So the second pick is Avenue Supermarket D-Mart. We are of the view that the second leg of the rally has already started because the stock has went through a good amount of time for the consolidation, and now it is up for a big target. So with a stop loss of 3950 at 4031 CMP, one can go long. The first target is 4150 and the second target is 4200.
we'll take a very quick break here and we'll be back with you shortly. The markets are in fine shape, 10% higher on ITC, ladies and gentlemen, 444.80.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi, with me Shail Bhatnagar, and we are in conversation with our two special guests, Gaurang Shah and Mitesh Panchal. Mitesh, ITC 10% higher. Would you continue to chase this momentum?
See, as far as ITC is concerned, as we know that it has a very strong, very steep sell-off from 481 level and spend quality time in the consolidation. Now, today's breakout, we'll have to see the follow-through, because what has happened in such a move, basically the follow-on buying is disappearing, and then subsequently the stock will come back to the original level. So interestingly, for today, the answer is no. I will not participate as far as intraday is concerned. I will also not buy delivery for next 2 to 3 days. Probably the best thing is that let us watch today's price action and also look at, after today's trading session, let us look at the breakup of the volume between intraday and delivery. And if the delivery basis volume is really promising, and tomorrow and the day after, for the next 2 trading sessions, if the stock is maintaining its upstand or probably maintaining the closing of today, then probably we can think of buying it. But after 10% of a rise or 8% of a rise today, it is not advisable to get into the stock.
Okay. Gaurang, to you, which way would you be looking at in the current setup in the markets? You know, we've been seeing a broad-based downtake, a pain point in the mid and the small caps, money shifting to large caps, especially some of the large banks, and the IT space coming back in flavor. Is that a space where you're keeping a keen eye now in the next setup of the markets?
So actually, I think by Friday there are a couple of points that I want to mention over here.
Sure.
I think we've had some interesting data points this week. IIP and CPI on India front, and we'll have some data points from the US also. On 15th of March, that is Friday this week, we'll have the advanced tax numbers, which will possibly give us a sense of which way the earning season is going to give you the moves, and that will possibly be on the better side. That's what our anticipation is. And markets will also witness the fourth and the last quarter earnings from next month, 15th April onwards, correct me if I'm wrong, or thereabouts, somewhere close to that. So I am extremely upbeat about the markets and the sectors that we would possibly want to concentrate in terms of both the earning visibility, fourth quarter earnings, and a little bit of longish time horizon. It's going to be banking, NBFCs, strong public as well as private. It's going to be autos, it's going to be cement. Cement, I guess, from the second half, we will see tremendous amount of uptake once we have the stability in form of government at the center. IT related selective large cap and mid caps would be the theme that I would possibly look at. And of course, there is going to be too much of interest as far as hospitality business is concerned. So that's going to be some select sectors that I'll be watching.
We'll concentrate our energies on ITC today. At the moment, the stock is still up 8%, 436 rupees, and there will be a very sharp trigger in terms of short covering, Sakshi, because at a 1 year low and below 200 DMA, there were many traders who had sort of pressed the sell button on options as well as futures on ITC, and you'll see that sharp bout of short covering coming in fairly quickly as markets open. Remember, yesterday the stock closed lower 1.1% and the open interest rose by 5%. essentially means that the bears were active. Now they will be reversing their trade and looking at 434, 436, 435 as their opening codes. The Nifty settled 96 points higher, 22,430 for you, ladies and gentlemen. Let's look at NSE 500. It's ITC and BSE, respectively, which are gauging investor attention as well as all trader eyes. Coming to you, Mitesh, you've mentioned DMart as well as the other stock as your top pick today. Your view on HDFC Bank? It was used yesterday very smartly to balance out the Nifty and the Bank Nifty. What are the charts of HDFC Bank telling you?
Oh yeah, you rightly pointed out. See, basically, HDFC Bank yesterday has acted as a supporter to the market, and lately, if you see, even ITC has participated. Today, for ITC, it's a different story. But as far as HDFC Bank is concerned, let me give you a disclaimer that we have already suggested to our clients as one of the top pick for our banking. So we have suggested two stocks, HDFC Bank and Kotak Bank. So as a disclaimer, our clients might have direct position in these stocks. I don't have any direct position in these stocks. Coming back to the chartical setup, I think yes, if you see the fall after forming a high on 1721 on 20th of December, it has, after forming that high, it went down to the tune of 1363, and since last 10 to 15 trading sessions, it's in the consolidation phase. Now there are multiple resistances in the price range of 1450 to 1500. So 1450 and 1500 might act as a resistance level. So you may see some sort of a selling out there, but eventually the stock will come out of this resistance level and test higher highs. So we are of the view that current setup suggests a strong upside. One should go long in the stock, and the near-term target which we are setting at least for the next 1 to 3 months is 1596. That is exactly the high which it has formed on 17th of January 2024. So we are of the view that sooner or later the resistance between 1450 to 1500 will be taken away, and eventually the stock will head for 1600. So definitely at current level, one should go long in HDFC Bank.
Okay. Gaurang, your views on the banking space, especially the large cap banks, HDFC versus ICICI and Axis, both have been going different directions as of yesterday. But what way are you looking at all of them really moving forward from here?
I think, first of all, actually, we've been positive on the entire banking and NBFC space for a pretty long period of time, and purely because kind of view that we have in terms of loan book growth and of course asset quality improvement, provisioning coming down, margins staying stable. Interest rates is something that we'll have to wait and watch. Possibly if we have the inflation within the control or comfort zone of the Monetary Policy Committee, you might have an interest rate slightly coming through possibly by end of March or maybe early next financial year. HDFC has been an underperformer, but we remain extremely optimistic on this bank. And I have also mentioned on this show, Sakshi, that one quarter disappointment cannot erase the entire history of performance that HDFC Bank has shown. So 2000 still we are maintaining the target on Axis Bank, beg your pardon, on HDFC Bank. 1350 to 1400 on Axis Bank, 1250 or thereabouts on ICICI Bank. Kotak Bank is something that is quite interesting, Sakshi. It's not been a performer. 2250, 2300 is the target on Kotak Bank.
Okay. That's the target on Kotak Bank as well.
Let's look at some other prices. We still have 3 minutes to go. The PSU pack, which came under selling pressure and profit booking yesterday, seems to be in a muted form. I can't see any good stock which I would want to mark out. Okay, Indian Bank, 1% higher, 521.8. There is National Insurance, NIACL, 243.90, 1.3% higher. What are the losers? Okay, Dredging Corporation, ITI, Container Corporation are three stocks that are down about 1% each. How about Defense? HAL was moving yesterday, nothing much here. 0.62% uptick on BEML. How about rail stocks? They were in thick of trade yesterday. What's opening 5% lower? Kernex, 555. So that's a Nelson, 5% lower at 555. Always markets throw up interesting things to look at. Coming to you, Gaurang, and this is a question to you as well, Mitesh. Small caps are showing signs of price erosion. Any one or two stocks, Gaurang, to you, which look to be on your radar, which you may buy at lower levels? Any names that you can suggest?
You were asking me to handle a six-blade knife, and you can get chopped off into small pieces, shell. So I guess if you are a Robin Hood and if you can do that, all the best to you. But yeah, I mean there are some interesting stocks in the small cap universe that we are positive. So if you consider Ashok Leyland, L&T Finance and Holding, NCC Limited, maybe a small cap investment idea, then these companies shall have the potential from growing from small cap to possibly mid caps. But I'll again request all your viewers and investors that please be extremely prepared in terms of volatility in the small cap and micro cap universe. Given the historical data, especially when you are an all-time high during an election year, you need to have elevated risk appetite.
Okay, ladies and gentlemen, we have the prices in front of us. The Nifty is opened 83 points higher, 22,416. My only concern is ITC. Okay, 6.5% higher, 430.3 in front of you. Let's pay attention to the three index heavyweights that are there. What is HDFC Bank doing? 8 rupees 20 higher, 1467. Reliance is open 1 rupee 30 higher, 2952. How about Infosys? In the green, 4 rupees higher at 1617. The Nifty Bank is up 125 points, 47,410 on its weekly expiry. Nifty IT index is in the green. So we have a nice green uptick across the board. Let's see what the FMCG index is doing, because ITC is a very strong component of the FMCG index. There's no surprise there. It's the top gainer, 1.4% higher, 54,424. The deal, ladies and gentlemen, has happened on ITC. The stock now reacting from its intraday highs, 5.5% higher. Let's look at what else is moving within the FNO stocks. HDFC Bank, we've decided. ICICI Bank, 0.3% higher, 1079.65. Oracle Financial, second day of gains, 0.5% higher, 83.12. Very quickly, top losers: Power Grid, Hindustan Aeronautics, 1.8 and 1% lower. AB Capital under selling pressure, 1.3% lower, 181. NSE 500. Okay, let's look at the top gainers. It's ITC again, 425, 5% higher. Linde India, second day of gains, 3.5% higher, 65.30. BSE, 3% higher, 22.17. Tata Elxsi, Natco Pharma, Borosil Renewables are some of the stocks between 2.5%, 3% higher. Let's speak to Mitesh. Mitesh, a fairly decent opening, 63 points higher on the Nifty. Any one or two stocks that catch your interest immediately? Anything that you'd like to do on ITC? We repeat the question to you, sir.
No, ITC, as I said, would like to watch for the next 1 hour what it do, and possibly when the gap of opening takes place, it is very important to see the first at least half an hour to 1 hour movement, because there are strong possibilities that in such a large cap the sell-off place. Okay, so let us watch out for that. Second thing, technically, the resistance on daily and hourly chart, sir, is 432. So I would be very interesting to see whether on the hourly chart the stock closes at 10.15 above 432 or not. If that is the case, then with 420 the trade is possible, at least for intraday. Otherwise, we'll leave the stock.
Okay. Gaurang, how are you looking at the pharma space? This space has been throwing in some kind of a momentum on the large cap pharma names like Dr. Reddy's, Cipla, Lupin. They're coming back in flavor. Oro Pharma, Glenmark, they also have some news flows coming back in flavor. Healthcare stocks have recovered from the battering that they had received 2 weeks back again. How would you look at the entire basket? Is there a stock or particular set of names that you would like to track here?
Selectively, Sakshi, I think there are plenty of opportunities. Especially, you were asking me about the mid-cap names. Uh, in pharmas, there are some interesting mid-cap names. Well, let me give you the top four amongst the large-cap pharma names that we are positive. So, Sun Pharma, Cipla, Dr. Reddy's, and Divi's Laboratories. So, this is your frontline pharma names in the mid-cap pharma universe. Aurobindo Pharma, Natco Pharma, Zydus Wellness, Zydus Life. These are some interesting names that we are extremely upbeat about. And my sense is that pharma companies which are focused in radiology, oncology, APIs, generics. That's the kind of focus that you should possibly have in the pharma universe.
Okay. Got that. So FMCG is the index that's the top performer, largely led by the move on the ITC stock today. Of course, followed by some other stocks like Nestle, Britannia. They are coming back in flavor again. Marico is inching higher in trades too. Let me ask you, Mitesh, do you spot any FMCG names? They've been large underperformers beyond ITC. Would you look at any?
Probably I would be looking at Hindustan Unilever Limited because if you look at the chart pattern of HUL, in the price range of 2300 to 2350, it is trying to form a bottom on a weekly chart. However, on the 2438 is remaining as a steep resistance, and since last 4 weeks on the weekly chart, stock is unable to cross this level on the upside. So broadly, it's in the range of 100 points, 2350 on the downside, 2450 on the upside. But the volume side, we are very comfortable, and we are of the view that sooner than later the stock will definitely move above its immediate resistance level of 2450 or 2450 and eventually witness a breakout and can test 2650 to 2700. So one stock which we can technically watch out from this space is HUL.
Okay, HUL. Gaurang, would you
Okay,
want to say
Sakshi,
anything on the FMCG stocks?
let's-
Anything that you like beyond ITC, that is?
Well, I think Tata Consumer Products, because it got hammered since there was an issue and a hangover on Tata Sons IPO. So I think if somebody wants to do some value buying or bottom fishing, Tata Consumer Products would be the one that I would be opting for.
Okay.
Okay, let's look at what's buzzing on the volume side. And Mitesh, to you, APL Apollo. There is a blockout that's happening, a very strong volume-led move, 1647. Any view that you would want to offer? It's moving tick by tick, and about 31 lakh shares have been traded.
Yeah, see, on as far as APL Apollo is concerned, on as far as price action is concerned, one can witness a breakout above 1620, and the stock is sustaining above 1620. Again, like an ITC, I would like to look at the 60-minute charts, and if the stock close above 1620 at 10:15, definitely it's a buy. And then probably for intraday, the target will be 1750, 1700 and 1750, 1750. So yes, above, if the stock managed to close above 1620, yeah, it's a buy at 10:15 for sure.
Okay, this is something that needs to be looked at because apart from ITC, the biggest volume burst is coming in APL Apollo, 5 times the daily average volume. Now almost 31.3 lakh shares have been traded, and the counter going fairly strongly. The other stock that we've been tracking is Poonawalla Fincorp, 483 for you, and about 50% of 5-day volume has happened in the first 7 minutes of trade. Mitesh, what is Poonawalla telling you?
Yeah, see, if you look at the chart pattern of Poonawalla Fincorp, once the stock has started traded above 350 on the weekly chart, it has continuously bought a buying interest. And if you look at the weekly and monthly chart, both, every decline has been bought into. So we are of the view that definitely a strong trend is emerging and it is continuing in the stock. So any dip for Poonawalla FinCorp is a buying opportunity. Even at current level, one should buy. But looking at the market volatility, the stop losses will be deeper. With a stop loss of 450, 450, you can definitely go long at 480 because both the weekly and the monthly chart are indicating a strong momentum. And the immediate target for the stock is 500 and 520.
Okay. You know, where I was focusing on the FMCG stocks, the one stock that has definitely moved up higher to all-time high levels is Colgate as well. How would you really look at this one, Mitesh? Would you chase the momentum on this one?
So as far as Colgate Palmolive is concerned, stock is trading at a lifetime high, and there are few stocks within the FMCG basket which are trading at a lifetime high. So definitely, yes, it's a buy. The reason why it is buy, it is only because of the fact that the stock has formed its high on 16th of February at 2,621, 2621. And after that, for the 3 consecutive weeks, the stock went into the consolidation with a minor dip on the weekly chart ending 2nd of March 2024. And after that, it has picked up and now very well trading above its recent strong resistance level of 2,621. So definitely it's a chaseable counter and one should expect a target of 2750 to 2800 in near term. The definition of a near term is between 1 to 3 months. So with a stop loss of 2550, one can look out for a target of 2600, 2700, 2750.
Okay. All right. The other stock that has really moved up in a very short span is Bajaj Auto from the auto space, and who better than Gaurang to really tell us about the two-wheeler majors. Hero Moto, Eicher also picking up pace, gathering pace at this point in time. Two-wheeler space, Gaurang, and how would you look at Bajaj Auto versus Hero and Eicher, and also TVS maybe?
So, but actually remain positive on all four. Let me not put my bias to any one of them, but it depends upon which premium segment you want to ride your bike on. So, if you really top end fan, then you can go in for likes of Eicher Motors and Bajaj Auto, and of course Hero MotoCorp with the kind of launches that they've seen recently.
Okay, let's look at the granularity of the market. Now, the initial enthusiasm on the Nifty seems to be waning from a high of 22,440, which was also the first resistance of the day. The Nifty has slipped down to 22,370. Let's look at the star boy of today, which is ITC, holding firm 5.5% higher, 426.95. This is, as I had mentioned, going extremely strong and holding on to its gains. Let's look at what's happening in the PSU pack. I want to see any stocks that have hit all-time highs. So we've discussed Colgate Palmolive. The other stocks hitting all-time highs are two IT companies, TCS like yesterday, 1% higher, 42.35, and Intellect Design, 5% higher, 11.72. Coming to you, Gaurang, you've always maintained a very strong, how should I say, liking for TCS on the long side. All those research reports are now proving to be true. At record highs, 42.30. What do you think is the future trajectory of TCS and what you be doing here?
So that's what the conviction is all about, Shell. When the entire market was underweight on the IT universe, not only last year but even in 2022, we remain positive. Then we remain positive in 23. We remain positive in 24. Tells me that possibly second quarter, starting 1st April 2024, that is the new financial year second quarter, we should see a very decent improvement in the earnings front as far as the IT companies are concerned. I am not at all in that camp wherein too much of dependence in US, Europe, budgetary spends getting cut, discretionary spends getting cut. I mean, tell me one thing, Shell. In today's world, when there are so much of cyber security related issues, forget about an MNC, but a small company, even as an individual, you and me, we want to protect ourselves from any kind of external threats in terms of cyber attacks. So who's not going to spend? Everybody is going to spend on it. So I remain extremely positive. I think the stock should head towards 46, 4700 over a longish period of time. We have a buy call on TCS.
Okay, let's take a detour to the broader market now. The market is slipping. As I had mentioned, it is going to be a very volatile day. The Nifty is now testing its first support. Remember, just 15 minutes ago, it was at its first resistance. So from a high of 22,440, it is now at 22,350, 360 actually. So an 80-point move has already happened in the first 10-15 minutes of trade. The Bank Nifty is quiet today as was expected. It's its weekly expiry. Now in the broader markets, ladies and gentlemen, it's the bears that are now pulling ahead of bulls. On the National Stock Exchange, only 984 shares are in the green compared with 1100 which are in the red. Okay, let's look at the pain points again. NSE Mid Cap 100 Index down 0.5%, 47,805. The small cap index is again down 0.5% at 15,000. So these are the two pain points that we are seeing at this point of time, and these continue to bother traders. They continue to bother investors as well. Within the Nifty, the advanced decline ratio is 19:30. So for every 2 stocks in the green, there are 3 in the red. In the Nifty 500, it's getting worse. 330 stocks are in the red compared with 167 that are in the green. Sakshi, there's another data point that I'd rather not say, but people can look up for themselves, the number of stocks on the National Stock Exchange which are on the lower circuit. That's a bit painful.
Absolutely. So the broader market pain is something that needs to be very carefully watched out for. You know, how much more downside go around from here do you really see? Of course, time and again we've heard SEBI chairperson Madhavi Buj point out to the froth or some kind of a bubble, being seen in this pocket, especially led by the price manipulation she's highlighted in the SME space. That clearly is the epicenter of all of this news flow too. And again, we are expecting SEBI chairperson to come out with some more data, and today's move, I think about 15-20 minutes from now she will get ahead to speak, and again we will be watching out for that. But broader markets, is this really the beginning of a much deeper pain, or one could see that this is bottoming out?
So I think, Sakshi, it's very tricky to answer your question, but let me say this in terms of what my understanding is. First of all, people who are investing in small cap, mid cap or micro cap, all those investors have to have knowledge about the risk that is involved in investing in one of these companies. Point number one. Point number two, historically speaking, in terms of performance, in terms of good times, you will have a very strong outperformance, and in terms of correction, you will have equally strong underperformance. And whenever corrections have come in, mid, small and micro caps have fallen off the cliff, not giving opportunity to retail investors in form of exit door. I think the authorities and the SEBI chairperson is right in terms of informing the mutual funds about making retail investors aware about the risk that is involved. So, I mean, beyond that, I think in terms of policy formation, what I'm given to understand is that they have given certain guidelines. Within those parameters, the mutual funds or AMCs have to set aside certain guidelines in terms of protecting investors' confidence and interest. But beyond that, I think it is the retail investor who has to be aware about the risks that are involved. And I have always maintained one thing: buy quality, don't buy quantity. So why do you want to get stuck in an unpleasant situation?
That's a fair point, and very well point taken from you, Gaurang, on that. Mitesh, let me bring you in. Mid in the small caps, would you still find that there are a lot of pockets where value can be looked at despite this kind of a fall, and maybe looked at it positively?
See, there are always pockets in any cap of the market where the bull and the bear runs are going on. So even in today, if you look at a stock like Infibeam, if you look at the stock like Unity Organics, if you look at the stock,
Infibeam.
yeah, if you look at the stock like GM and Fodla, I don't know because I have a limited understanding of the fundamentals. So in which cap you are putting it, that I don't know. But these are the pockets where the value is still left. I mean, if you look at the GM and Fodler, the chart, I mean, since last 4 years, it has underperformed, and now it is showing the kind of a performance. Same is the case with the stock which we have discussed, Aviation Supermarket. Same is the case with Vinity Organics. Same is the case with India Mart. Same is the case with Infibeam Avenue. So there are whole lot of a list where the 3 or 4 years of a consolidation is finally getting into the breakout, and you see a good upside even in this kind of a challenging market going forward. So I mean, all you have to look at is when the market is an all-time high. This is our house view that let us look at or let us prepare a list of the stocks which have not performed in last 3 to 4 years, despite a marathon run in the small and mid cap. And believe me, there are more than 50 to 60 stocks in the small and the micro cap category where you find a value. For example, a typical micro cap company like UK, a typical micro cap company like Shesa Sai Paper. In these kind of companies, technically, yes, there is a very strong upside from the current level. But whenever you're talking about small cap, the first and foremost thing, as Gaurang sir has also said, one thing which you should keep in mind is a stop loss in place as far as technical goes. So if you do not have the discipline to follow the stop loss, never, never, ever get into a micro cap or a small cap, because eventually it will end up losing a big on the capital side and it will erode your capital. Prima facie it looks very interesting, tempting, and exciting to participate in. But if you do not manage the downside, if you don't have a proper risk appetite, never, never, ever get into this space.
Okay. There is some very sensible advice on the way how to manage your portfolios and how to manage your trading account coming from two industry veterans, which is Gaurang. Buy quality, stick to quality, and buy the pain if there is what you see in quality. And of course, Mitesh by saying that stop losses are must to protect your capital. Let's take this discussion forward, Gaurang, and I would like to take your view on Indigo. See, the broader theme is that promoters who are savvier in terms of how businesses are, their own businesses are doing, are taking advantage of this sale, which is there on the markets in terms of the bulls that are running amok. How do you see Indigo now at about 3140? 3200 at a record high at a time when the entire promoter stake that was on offer 2 days ago has been absorbed?
So before I answer that, I don't know whether this was the last part of that promoter sale or whether there is additional that's going to come out. But
Yes.
having said that, it's a very honest disclosure share. In the aviation pack, we've been positive only on one company, that is Interglobe Aviation, right from the time the IPO hit the street. And during the IPO, we had a long-term investment, and you can very well imagine the kind of wealth that has been created if you are an IPO investor. Or even after that, if you have bought the stock or invested in the stock after it got listed, and the kind of history it has created. My sense is, Shell, that the fleet addition is going to be auguring extremely well as far as capturing more sky is concerned in terms of revenue generation. The overhang, if I see anything, is in form of the Plath and Whitney engines, which have created an issue, and the aircrafts are way in the hangar in any airport in India. Resolution of those engines is taking a while. Once it is sorted out, I think there are going to be more strength to the fleet. But it is one of the stocks that has attracted investors from a long-term point of view, and it will always continue to create wealth. like I said, further exit door of promoter can create an overhang in terms of valuation at which the exit is going to happen, but that's going to be lived only momentarily.
Okay. There is something else. The reason that I ask this question is that, players like British American Tobacco, who have now partially sold a huge chunk in ITC, will be deploying their funds from this sale to buy back their own stock in the UK market. So BAT has announced a share buyback till December 2025 to the extent of 700 million pounds in 2024. So the money that it is going to raise from the sale of its subsidiary in India is going to be used to buy back its own stock. If you look at the valuations of how BAT and ITC are trading, of course, relative to each other, BAT is at a discount. And what BAT is doing is raising funds in India and deploying it to reward its own UK shareholders. So that's how the global market is functioning. People are exiting what they presume are higher valuations in stocks such as Whirlpool, in stocks such as BAT, and using those proceeds, in the case of BAT, to buy back their own shares. Sakshi.
Okay, fair enough. The markets in fact are slipping. The small cap index has fallen 270 points from the day's high point, and in fact is now trading 1.5% lower in trade. There's also a slippage on the mid caps that's fallen 600 points from the day's high as well. The Nifty is down 100 points from the day's high. 0.08% of a dip can be seen on this one. 22,312 is what the Nifty is really trading at. Pressure building up on several sectors like autos, healthcare, PSU banks, mid caps, small caps. Those are the pain points. They are dragging the index as of now. But FMCG, IT, the Nifty Bank, including the private banks and financial services, still holding on to some gains at this point in time. A lot of movers on the future space. Metropolis Healthcare has picked up some strength, 2.5% higher. Indian Hotels is moving up, 1.5% up in trade. United Spirits is also gaining some traction, 1% higher in trade. Pidilite is moving up as well, 1% higher for this one as well. Mitesh, anything from this basket of futures movers stocks today that you'd like to chase for momentum?
Probably pretty light. Because if you look at the run on both the daily and the weekly chart, it is really promising. And for the week ended 7th of March 2024, the stock has witnessed a very strong breakout with the volume. So typically we can call it as a price volume breakout, and sustain above its immediate resistance levels of 2840, and the stock is still sustaining above its resistance level. So yeah, Pidilite is one thing which I will definitely watch out for. With a stop loss of 2840, I will watch out for a target of 2950 to 3000 in next 1 to 3 months.
Okay, Gaurang, would you have a view on Pidilite?
Okay, 9:41, ladies and gentlemen.
Can I go on, Shail, or you want to come in?
Yes, please continue, sir.
So yes, Sakshi, we do have a positive buy call on Pidilite, and my sense is that the entire specialty and agrochemical, after a underperformance, should start looking up. So Pidilite, UPL is the nerve which is extremely painful to us because of the underperformance. Other than that, we are positive on Aarti Industries, we are positive on PI Industries. Our sense that specialty and agrochemicals should start looking positive from second half of next financial.
Okay, what we'll do, ladies and gentlemen, is take a very quick break, and on the other side of that break, we'll be discussing stocks like Reliance Jio, as also the Bombay Stock Exchange. Stay tuned. Thank you so much, Mitesh, for the wonderful time that you spent with us and the 2 stock picks that you shared. Thank you.
Thank you.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back on Market Today. We are at 9:43. The first 25-26 minutes of trade have happened. While the Nifty has been very, very volatile, it's moving in a range of about 120 points in the first half an hour of trade. The high being 22,440. For the moment, the low is 22,310. The Bank Nifty is flat as flat can be on its weekly expiry day. Let's now look at where volumes and money are coming in, and that's the Bombay Stock Exchange. 2196, 2.2% higher. As Sakshi has pointed out, there has been a fairly strong competition between the National Stock Exchange and the Bombay Stock Exchange to control volumes, sentiment in the futures and options space, and within that battle, NSE fired an arrow yesterday. The Bombay Stock Exchange 2199 to 2.2% higher. Tata Elxsi has started to move 7760, 2.5% higher. We've discussed Colgate and Nestle in some detail. Mitesh has offered views on GMM Pfaudler. And what else is moving? Well, it's rock solid on ITC, Sakshi, 6% higher, 428.75. What are you observing?
Host of other stocks that are moving in trade, like Gaurang was mentioning, he likes the hospitality sector. Indian Hotels is one that's moving up in trade, 1.5% higher. We've been seeing that Lemon Tree has launched its new hotels in Udaipur as well, and of course ITC, which also has a hotels business that we track, and which will be demerged in the second half of this new fiscal FY25 is what we are given to understand. Your own sense, Gaurang, hospitality space, how are you tracking the top stocks that you may be looking at from this basket?
That it's becoming a very heavyweight on the wallet because of the tariffs that have gone up. I travel length and breadth of our country, Bharat, and I still have a very clear memory about the tariffs pre-COVID level. Yeah. Tariffs when the restriction got lifted up and the new normal was set in, what was the tariff at that point of time? And as very recent, I had undertaken a travel. Believe me, Sakshi, the tariffs from forget about the pre-COVID travel normal, but post the restriction getting lifted off, the tariffs that were there, then the new normal set in, restriction getting lifted off, we had an increase of almost about 10 to 15%. From that time to the travel binge that we are witnessing, Sakshi, there is an additional tariff upward move, almost about 5 to 10%. And I was listening into the management of Indian Hotels, Taj GVK, Lemon Tree, and others. All of them are extremely upbeat about an additional 5 to 10% or maybe 15% upward revision in tariff. This is only the room tariff I'm talking about.
Yeah.
Take the banquet, Shadi Byah ka mahal, food and beverages revenue coming in, and the kind of expansion that they are taking. And all of them are expanding left, right, and center. And you have, religious pilgrimage in form of the great Pran Pratishtha in Ayodhya and Ram Lalla being set over there. So, and there will be plenty of more such events that will attract a lot of tourism. So, I mean, as a sectorial bet, I think hospitality is something that we should definitely look at. I only hope that we don't have any unpleasant surprise from China.
Okay. I think, Gaurang, you need to make a trip to Delhi. We welcome you with open arms. Check out the hospitality of whatever place you feel like within Delhi. and allow us to host you for a couple of meals. Again, we'll discuss a lot of good stocks on a new show that Sakshi and I do, Bulls and Bites. And with you, of course, it will be vegetarian.
I really want to.
It'll be great fun.
I really want to binge on the chole bhatures and the kulchas. I've heard a lot about them. We don't get that taste that you get in Delhi in Mumbai.
So the next episode, we are fixing it already live on Market Today with Gaurang on Chacha on Chole Bhature on Bulls and Bites. That is something that you're going to be seeing.
Thank you.
And Gaurang, you will be surprised to know the two authorities on Chole Bhature in Delhi are talking to you at this very moment. We actually have a Chole Bhature map of Delhi, 45 stops in Delhi where Sakshi and I have been seen very frequently. So welcome any day. Both of us are experts on Chole Bhature. Whether you want to have it in North Delhi, South Delhi, Central Delhi, East Delhi, we can tell you the top 3 stops there. And with a great amount of experience. We are not talking theory here. As my girth will tell you, it's one of the best things in Delhi. आइए आपको छोले भटूरे का एक क्या कहते हैं दार्शनिक टूर करवाएंगे.
Well, I'll be too glad and honored. You also and Sakshi also. I think I have got the right people. As far as the expertise in chole bhaturas and the kulchas are concerned.
Okay, absolutely. I'm also going to send you a video shortly. I was in Central Delhi last week and we had some fantastic chole bhatures. Would you imagine there was a whole host of our Gujarati friends who had come down from Ahmedabad and they said Delhi aaye hain chole bhature khane hain. तो मैंने कहा जी आप बिल्कुल सही जगह आए हैं, आपको लेकर चलते हैं. I'll just send you that video shortly, Gaurang, and please take the flight tonight and let's enjoy the weekend on Chola Bhaturas. Sakshi.
Well, absolutely. This we have to implement as soon as possible, and now that it's been mentioned on air, all our viewers will also be awaiting the outcome of this video too, and which we will get very, very shortly. Already our first episode of Bulls and Bites is getting viral with Devina Mehra, talking on chart in Delhi, Bengali market, and a whole host of anecdotes that she shared about. And she constantly kept on debating how Lucknow chart is better than Delhi chart. So we are going to be seeing some more chatter on Chole Bhature going forward. So that's something, of course, all the viewers who have not yet caught that episode, please do go ahead. It's one of a kind that you would have seen on Business Today television and in the realm of business channels too. So let's look at some more stocks then. Now it's already 9:51. Okay, JG Chemicals from the primary market space is looking to debut, and a 5% discount is what it is settling at in the pre-opening trade. So 211 as against the issue price of 221. We'll keep an eye out on this one as well. 10 o'clock is when the listing happens for this one. Yes, Shail, you were saying something.
Okay, all I was saying, Sakshi, was that there is no competition of any city with Delhi when it comes to Chola Bhatura. So there is no Lucknow, there is no Kanpur, there is no Allahabad when it comes to Chola Bhatura, only and only Delhi. So Gaurang has been fixed for Bulls and Bites with Chola Bhatura. Ladies and gentlemen, please await that lovely episode. Now we are at 9:51, Sakshi. The Nifty is slipping lower. Now at 22,311, down about 26 points. So the day's high was 22,440, now at 22,310. Already a 130 point volatility in the first half an hour of trade. Let's look at the pullers and draggers on this index so as to find out the contributing factors on either side of the Nifty. Needless to add, it's ITC. It's the top draw today, contributing 50 points in the green to ITC. ICICI Bank and HDFC Bank respectively are contributing 12 and 6 points. TCS and Infosys 4 points each on the green side. In total, 62 plus 10, 72 plus 6, 80 points in the green from the top 5 contributors. Now what is pulling it lower? Okay, NTPC, Power Grid 14 and 9 points respectively, Bharti Airtel 10 points, Axis Bank 8 points. The problem is, ladies and gentlemen, that the advanced decline ratio on the Nifty is favoring the bears, and therefore you see the index slipping into the red. Only 17 stocks in the green, 33 in the red. So these 33, even if they contribute 1 point, half a point each, they are the ones that are pulling the index lower. What else is of interest to us? We track 19 indices for you, ladies and gentlemen. Barely 2 are in the green. The FMCG index and the IT index. We've discussed ITC, Colgate, Palmolive within the FMCG space, and within IT, of course, TCS has been the top draw. Losers today, 2.2% lower on the Nifty Energy Index. We are at 38,720. The small cap index, Sakshi, the pain is now increasing. Remember, this is the third day of loss on the Nifty small cap index, 44,780. Out of the 100 shares in the national small cap index, 95 are in the red. The mid cap index is down 1.6%, 47,306. Out of 100 shares, 89 are in the red. So you know where the pain is. Sakshi.
Absolutely, Shail, and another 2% down for the small cap 100 index. Remember, it was already down 10% up until yesterday's fall from its peak. Now about 11.5 or so odd points lower in that realm as far as the small caps are concerned. So the pain point continues. Mid caps also seeing a whole host of losses right now, 1.5% down, and the stocks that are losing the most include Adani Power, 4.3% down in trade, JSW Energy 4% down in trade. You also have MRPL, that's lost about 3.8% in trade, trading now at 201 odd levels for this one. So that's the loss. Arvind is down 4%, Torrent Power is down 4% as well. Those are the other movers on the downside. Nalco has lost some ground too as far as the mid cap losers are concerned. Torrent Power is down in trade. So a lot of these power names are definitely bearing the brunt. Power Grid, NTPC, already mentioned by Shail before. Apart from this, GMR Airports, IRB Infra, Fortis Healthcare, these are the ones that are dropping anywhere 3.5 to 4% in trade right now. Along with it, we also have some banking losers too. So Bank of India, that's down 3.2%, NBCC, that's dropped in trade too, about 3% odd or so, and the Adani basket is also looking at some discount. So Adani Enterprises, Adani Power, Adani Ports, all three of the major listed ones are down in trade as well. So the pain is escalating as of now. The Nifty IT index only about 0.1% higher in trade. It's the FMCG index largely led by ITC move that is holding the fort as of now as far as the markets are concerned. Just about 10 stocks on the Nifty that are into the green, led by ITC, Nestle, Britannia. Then you also have IT stocks like LTI, Mindtree, TCS holding up. Banking stocks like ICICI Bank, Kotak Bank, HDFC Bank, Bajaj Finance as the other one that's moving up, Infosys again from the IT pack, and SBI Life Insurance. Those are the set of stocks that are still holding up the ground as far as markets are concerned as of now. Looking like, of course, the markets have actually lost all the gains since the morning for sure. All across the board there is pain now escalating, Shail.
Okay, Sakshi, I think we'll just take it easy. Of course, you have pain in the market, and there is no pain visible in large caps. Therefore, maybe that is the safety that people are seeking, and therefore you see moves coming on stocks like Colgate. Of course, ITC is news-led. Let me just share with you the names within the Nifty which are moving in the green, and that should give you some cause of comfort as to where this money is coming into. Of course, we've discussed ITC and Colgate, but let's look at the winners. Nestle. Sakshi, 2 days ago we were talking about how money will move into FMCG and pharma. because that is where the defensive play is. L&T Mindtree 1% higher, 52.50. ICICI Bank, TCS, Kotak. So remember, these are stocks which offer long-term comfort to people who've booked out of small caps and mid caps. So once they're booking profit there seems to be a move towards large caps and quality large caps as such. It's not as if that you don't have losers within the Nifty. No surprise here, the stock that I'm going to take a name of, Power Grid and NTPC. Remember, they were screaming at record highs all of February, all of January, all of December, November, October. You can go back in time and look at it telescopically. There is profit booking happening there on PSUs, and that money is now moving to some parts of FMCG, some parts of pharma. Therefore, a record high on Cipla, Sun, Dr. Reddy's, and a record high on Colgate, at least within the FMCG pack. Sakshi, I don't think so there is any cause for worry, but the selling pressure within the F&O space is increasing dramatically. I'll mention the advanced decline. Just 52 stock futures are in the green, compared with the 128 that are in the red. So again, a ratio of 2.5:1, which is bears are ahead on the last street. Sakshi.
Okay, time to wind up our special edition right here with the Nifty dropping 40 odd points at 22,294. So we've tested that 22,300 mark on the downside. We'll continue to track the market move for you. Meanwhile, just stay on Business Today Television as we will make way for SEBI live to get started with Chairperson Madhuri Bhuj also mentioning some important points. Remember, 2 days back she has mentioned something which has led to a downfall, severe pain point in the broader markets. It's extremely important for you to track what the regulator is of the view right now. So stay tuned for that on Business Today Television. Many thanks for joining in for this one.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.